Welcome back. Investors may have big tech on their minds as market faces economic uncertainty and also the potential for further rate hikes. But there are other ways to play, and investors may want to keep an eye on others to stay clear of. And here with more of this is Lee Munson. He's a Portfolio Wealth Advisors President and CIO. And Lee, thanks for sticking around here. Let's start with some of your picks. Occidental Petroleum. I've been fascinated with this ever since they bought Anadarko Petroleum back in the day. Reading your notes, it's all about the Permian Basin. And the CEO was roundly criticized at the time for paying too much, looking pretty prescient now, perhaps, and maybe hasn't had to walk it back as much. What do you like about Oxy this minute, though?
This minute is that they're 4 years into that merger, right? And so they've gotten the kinks out. I love that they have cheap production. I love that this place has half the Permian Basin in their back pocket because, I think a lot of people don't get in America that the Permian Basin is America's easy oil. It's huge, the fields are nice and rich, and it's easy to extract it. And then when those fields dry out, when your well gets dry out, you can pump all the stuff in it and get out through fracking. Occidental has some proprietary processes they do in fracking. Now, why is that important? I've got some clients that do fracking stuff, and it eats away at the major's profit margin. So if you can do stuff in-house and you can vertically integrate...
You're talking about not using oil service companies like Halliburton or...
Exactly. And so if you have part of that process that you're controlling yourself, and then you can get a profit advantage. And so it's all about having half in the Permian Basin, right? It's all about the Permian. It's all about proprietary knowledge on how to do parts of the CO2 fracking. And then, I'm not going to lie. It's nice to see Grandpa Buffett having a little floor on this and feeling like he's going to step in around that 59 level. But I think there's a lot more to it. Also, I think that there's a catch-up trade. It's a little off versus some of the others, and I think it's a good deal. But I think that goes for energy sector in general. It's beat up, and I understand that it did really well. But I think going forward, you have to think, how is this going to compound for the next 5 years? At what valuation? And things start looking attractive.
Yeah, a bit of a cool down that we've seen so far, at least in the energy sector. Let's talk about another name, or at least we should say two names that you really like in the tech sector. We're talking about Alphabet as well as Amazon. Now, Alphabet, you could argue, is the AI play that you were talking about earlier, but talk to me about how you're seeing these two names in the larger picture of the tech rally that we've been watching play out.
Well, when you look at the top seven, you can look at relative valuation over, say, like the last 10 years, okay? Now, let's take NVIDIA out of it because, great, you saw AI, you own NVIDIA, you get a big gold star. Have at it. You're almost about, where it was back in, late of 2021, a little higher, a little lower, depending on what the day is. I think that when you look at the other S&P 7, as we're now calling it, you've got Amazon, Facebook, Google, all at the lower end of their historical valuation, right? Which is crazy. I mean, they print so much money. For me, if I had a gun to my head, and then you ask, what do you own? It's like, a little Amazon, a little Google here, because I think that on a relative valuation, you get a catch-up trade. And when you're a guy like me who's a little bit more value-oriented, I don't want to hop on fads and lose a bunch of money, I think that that's important, especially if you're picking a basket of stuff that's basically the cause of the gains in the S&P, the vast majority of it, what's relatively cheap and why. Because, again, AI, no AI. I think the only AI plays NVIDIA. Everything else is just coattailing off of buy what worked before.
And nevertheless, the AI, that ticker, that money, the money ticker belongs to a company that's basically a microcap, maybe a small cap, C3 AI. There's a certain danger to just buying blind tickers, but that's something that a lot of people have been conditioned to do over the last few years. And then I got a question about the catch-up trade as well. Intel, all right? If it's lagging, maybe it's lagging for a reason. That's why I might look at it at this stage, but your thoughts?
The story with Intel, I live out in New Mexico, and I'm a few miles from one of their big fab plants. And, you get the sense that this is such a large company. They control so much of the market. I don't think people understand how huge Intel is. But it's dead money. It's moribund because they're too hooked into the PCs. It's always about, in 10 years, Intel's going to look like a different company. Well, I don't have 10 years. AI is today, right? So when you're looking at a catch-up trade, I'd rather have Taiwan Semiconductor, right? At least they have the fab stuff and are doing what the hot new stuff is, right? With Intel, it's always about in another year, we're going to transform, we're going to transform. You know, you're trying to move the Titanic. It's too hard. And I'd rather go with Taiwan Semiconductor. So that's my cue. And then AI.com or AI, the ticker symbol AI.
Yes.
So back in 2016, they changed their name from C3 Energy to C3 IoT for, remember, Internet of Things,
yes.
right? And then when you go on their website today, they have this whole thing of like explaining the Baker Hughes deal. And it's like this 2-page memorandum like, well, we got this big client and because of that, we have all these other clients and we've taken half the revenue and, you know, put those into earnings now, even though they're 6-year contracts, but that's okay. And just you're like, you know, if we needed to have a memo explaining things, then I think that that's exactly the poster child from when I came up in the business in .com, where everything changed the name of .com and changed this stuff. So I think that's going to be more. And again, I hope that this large language model is able to increase productivity across the board for 10%, because if it's not, we better have a stunning landing for the next 6 months. We better have the Fed nail it. We better have some large language models make us more productive to, you know, all the corporations of the world. Because if not, you're going to see increased volatility. And I think when you look at the MOVE index so low on the 10-year, it's like, buy protection, keep your options open, and why would you go out long duration on the bond side?
A lot of ifs out there, very, very tight rope for the Powell & Co. to navigate. Lee Munson, always great to see you here. Thank you so much.
Thank you.